profit results for the past month. So I've just put here, today's the 7th of April 2020, and this is from the 3rd of March 2020, so it's just over a month. So I thought I'd put the same date there, but it's basically just over a month. And so I haven't got much money in my account. I'm waiting to put money in my account. But I've still been trading with this account, even though it's not worth trading because the fees are so much. So if you look at the true profit and loss, then you can see that, look, ANF, I actually won that ANF, but the true profit and loss says I lost 44 cents because I'm trading such a little amount of shares that the fees just wipe it out, you know. But obviously, if this is 10 times more, those fees are still going to be the same. So if I'm trading with 10 times more money, then I'm still going to be paying the same amount of, it'll be a bit, yeah, I mean, anyway, it's not including the spread, but what I'm saying is there's a minimum of $1 to get in a trade, you know, to buy a lot of shares, one lot of shares, and $1 to sell the lot of shares, you know, and normally it fills in one, you know, you fill all your shares at once, but what I'm saying is basically there's a minimum of $2 to get into a trade, and I think it's normally around, well, you can see here, look, this is my true profit and loss, so look, you can see the SIC there. I paid $10.73, no, I paid $2.73 in fees, and so I won $10 on that trade, you know. There's one there, REML, look, $35. That must have been a good trade, that one. So anyway, what I want to do with this video, I know these are long videos, okay, but I'm trying to teach you, and I was boasting a bit then, but this is not a very good boastful thing, you know. This is little money. I'm waiting to put the money on my account. This is why I'm taking it so seriously. This is why, you know, I feel like I'm in a position where I can at least talk about it, you know. But you can see, look, so my total gain there was $53, okay? And look how many shares I'm buying. Like quantity, long 12, you know, 100 shares there, 50 shares, you know. It's nothing. It's just, I'm just doing it because it's the act of using my broker, so that even though I'm practicing with this, the money obviously doesn't mean anything. Even though I'm practicing with it, I'm still using my broker. You know, I'm still clicking the buttons on my broker, so it's a simulation. So I'm actually buying and selling, you know, CFDs, shares, effectively, you know. But anyway, you can see that, well, I can count here how many I've won and lost. So look, so if it's got a minus, that means I've lost. So how many is there here? 50. Is there 50? There's not 50 there, is there? 1, 2, 3, what, 4, 5, 6, 7, 8, 9, 10. 25. There's 20, yeah, sorry. So there's 25 trades there. And how many did I lose out of 25? So I can see anything with a minus is a loss. Anything with a 0 is a gain, because remember the fees, look, that's a true profit and loss. I paid $2 in fees, so unrealized profit and loss, 0. That means I got out of break even, but I lost $2 in fees there, you see. So let's have a look. So look, and these are not in date order, they're in alphabetical order. So I wanted to put it in date order. I wanted to get the last 2 weeks and, you know, show you the date of them, but it does it in alphabetical order and you can't change it. So anyway, okay, look, so 1, 2, then 1 even there, 1, 2, 3. Okay, now I'm going to count how many I lost, because there's less. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I lost 11 out of 25. I lost 11 trades. That's bad. You know, I should be way above that. You know, I'm not happy with that at all. That's really bad, I would say. It's very lame, you know. I should be able to do, you know, 3 or 4 or 5 trades in a day, and they should, 80% of them should work. But anyway, look at the prices on a lot of them. The money I lost is quite low, you know. So if you look at the minus ones, look, So you got realise that, look, 1.2, 156, $1.56, you know, $3 there, and then I lost $3. So I'd made, so basically I cancelled out that one. So that $3 and then the -3, I still got the profits from the 1.2 and the 156 there. And then look, $6.93 I won. And then I lost $1.30. Look, then I made $2.40. You know, look, let me get a calculator and do this, because then look, well, you can see. Look, so imagine this is 0. Okay, imagine your account is 0, and these are the trades I took in the consecutive. Because this is going to give you and me a realistic, you know, fluctuation of the bankroll. So say I've got 0 now, and then look, I make 1.2. So 1.2 plus 1.56. Now I've got $2.76. Then I make another $3. Look, it's pretty good. Then I lose $3. Bang. 3.06 even. Now I've got $2.70. Then I make $6.93. You know. Then I lose $1.30 plus 2.4 minus 0.92 minus 1. Oh no, plus 1.92. So I've gone. So look, by the time I get to that 99 there, I've got $11.73. You know, and I could keep going. Look, I've got a $12 win there. So you can see that this has been a very profitable run of trades. You know, I only got up to that 99 there, but anyway, that's giving you the example. That's off these trades. You know, from 0 to $11.73, and you can see the way that, and that's how you know. The point is that, oh, it doesn't matter. I'm talking rubbish now. But anyway, let me get into the video. But I've showed you that. So what I'm going to do, okay, I'm just going to pick a few stocks off here, and I'm going to write them down. So I've got a pen here. I'm going to write it on my hand. So I'm going to look at some of these stocks that I took. So I'll look at a loser and I'll look at a winner. So BTG, I'll look at that. Okay, BTG. And then we got CRC. Have a look at that. CRC. And then let's have a look at one of these called ANF. Let's have a look at that one. ANF. I'll do that as number 1. Okay, I'll look at that first. And then let's have a look at some other ones. Let's have a look at that $12.73 one. So that's SICK. SIC. I remember that. I can't remember the chart, but I remember SICK. I remember it was SICK because I made a SICK gainer. And REML as well. I've got to have a look at that. Got to go for the glory. Okay, but this is going to be a long video, so I'm going to do quite a few of these. Let's have a look at SBSW. That was a bad loss. SBSW. You know I'm going to cringe when I get to reviewing these as well, these losses. I'm going to be like, damn you. Okay, let's have a look at, alright, TWI looks bad, doesn't it? Hello, so due to not being able to... Hello. So it's in at 10:41, out at 11:12. I'm just trying to remember that because... Wait, I can go 3-minute chart here. In at 10:41, out at 11:12. Ah. And that was on the third, I think. Which is back here. Oh. So I'll go forward a bit. Okay, in at 10:41, out at 11:12. So look, it already started going up here, April the 2nd. It's a bit slow, this situation I've got here. So it was April the 3rd, I think. Yeah, it must have been. Oh, this is cool. This is a nice one. This is a good one. This is a good one, you know. So look, this is a very classic scenario, which is nice to, you know, sometimes you can get really nice entries when you see a stock just moving up, you know, it starts to break these levels, just going up, you know, it's making this, see, between, before 11 a.m. there to the end of the day, April the 3rd, it goes up, sticks up, drops down a bit, goes up, it's just going around the middle, and then it just creeps up towards the end of the day. Next day, opens above 120, you know, no, pre-market's above 120, and then boom, huge, moves up to 160, you know, and then it goes down to 130. Then, you know, it doesn't keep going straight down, it goes back up to 150 straight after. So that's showing that little extra arm up after 10 a.m. there, you know. That's showing that it's not just a one-trick pony, you know. And when it comes down to 120 there, you know, it was nice. I got in, look, and obviously it went down after 11 there, 11:20. It went down, back down to 120, and obviously I got in at, I think it was at 123 I got in, didn't I? That's what it was, $1.23, and I got out $1.30. So I got in at 10.41. Look, you can see exactly where I got in. Look, if I can get this right here. Like, that's 10:39 a.m. where that horizontal axis is there. So that's just there that I got in at 10.23. And then I got out at 11.10, didn't I? So 11.10. You know, it's a massive move because it's such a low price stock, you know, and it moves up 10 cents. It's huge, you know, it's like an 8% move or something. And if you're using leverage as well. And yeah, I guess I just took that scalp, you know, took that level at 120. Obviously above 120 I bought it at 122 because obviously I bought it up at 123 because for some reason, you know, I didn't think it was going to go down to 120 exactly, you know, because I thought it was so strong there. It's obviously why I did it, but I'm telling you, I would have put my stop at 119 there, definitely, without a shadow of a doubt, because that's what I was banking on working. That's what I got at 123. And it seems weird, doesn't it, to get in at 123? It seems like a weird number. Why didn't, you know, you talk about these levels at 120, 130, 140, 150, round numbers. You're getting higher, but you're looking at the pattern, you know, you're looking at, okay, basically, you know, people talk about buying the dip. This is a dip buy, you know, it's a dip buy because it's going up, it's showing all that upward movement, and then that big move up, you know, there's method to the madness. It came down to the levels it was at pre-market. And anyway, look, this is what's panned out. It's just, anyway. Let's have a look at the news. Like, I'm going to have to get out of this because it's annoying me because it runs too slowly. This this app. Oh, you can see what I got in. Look. You know. Look at 90 cents. It just started zooming up and then. $120, I took it off and I got that scalp. I got that movement, you know. That movement just there, you know. I got that green candle basically. And so, you know, that's a pretty nice move on that chart to get. Yeah, it did the same thing yesterday. Look, April the 2nd, look. It did a similar kind of pattern. But that time it bounced off $1. That was even better. I mean, that didn't even go down to $1 either. You can see, look, April the 2nd, it shoots up above $1, which is obviously a huge milestone. But you see where it dips down, it hits that moving average, which is just arbitrary, by the way. It goes down to about 102, 103, look, 102. You could have got in that 102 and ridden it up to 110, you know. See, that kind of move. It did the same thing here, basically, you know. 120, went up to 130. And it was on the strength of that massive spike up to 160. So that's basically saying, boom, that is a huge buying spike. And when it goes down to 120, fair enough, it hasn't gone right down to 110, you know. It hasn't gone right down to 110, but it's made such a big move up, and then it's even held up and gone back up to 150, and then it comes down to 120 and it settles there, and that was a real nice trade, you know. And it's such a good example of where to put stop loss as well. because basically I was expecting that to work there. Where do I put the stop loss? I put it at 119. I want to give it a chance to hit 120, you know. I don't want to shave off my trade. I don't want to get, you know, but so that every stop has to be logical. So I'm banking on it not breaking 120. You know, I don't want it to go down anywhere more than where I got in. I want to get in at the very bottom, where I think is the very bottom. That's what will get you at the start. That's what will take you time to learn, to, you know, because basically every time you get in a stop, you've got a perfectly logical stop loss. You want it to work, and that's why day trading is not, it doesn't take ages. This is the stuff that you do during the day, and at the end of the night you can forget about it, you know. You don't have to keep thinking about it, because your money's already, you've made your money for that day. That's it. All those stocks, they're all done with, you know. You're just looking, even after you take one position and you finish the trade, that's it. That stock's finished, and your idea either worked or it didn't work, you know. So you're looking for ideas, opportunities to make bets, basically, you know. And that was an opportunity that I saw, and I took it, and it worked. You know, you can see from my results that I showed at the start of the video that how many worked and how many didn't. I lost 11, didn't I? And I drew 1. But you can see that, you know, all the trades that I made money on, I made more money, didn't I? And that's the reason. You can see why. That look, I got in at 123, and I got out at 130. So the stock was at 131 when I got out, and I actually paid the spread, got out at 130. So I made 7 cents per share, and obviously the stock was at 122, and I paid the cent to get in. That's why I got at 123. So I made 7 cents per share minus 1 cent per share. So I made 6 cents per share on that. But you know, it doesn't seem amazing. You know, these low price stocks, I'm only trading these at the moment because my account, I haven't got any money in my account, you know, but as soon as I get more money in my account, I'm not trading anything under $3, you know, or anything over $9. And this is how I'm constructing the way I manage my bankroll, which I can work with in an exponential way, i.e., as my account grows, logically the shares that I buy grow, but I still never take more than a 3% loss risk on any trade. So obviously the upward potential is not capped, but I never want to lose any more than 3%. So if my stop loss is 10 cents per share, I'll have to buy the appropriate amount of shares so that if it hits that 10 cent stop loss, I've lost no more than 3%, you know, and actually no less than 3% either, you know. I don't want to lose less than 3% because I want every single trade I take to be exactly the same risk reward. It's not going to be exactly the same, it's going to fluctuate quite a bit, but every single trade I get into is exactly the same because, you know, I'm adjusting how many shares I buy to how big the stop loss, how big my risk is. So every trade has got the same risk, you know. So one trade is no different to another trade. There's no more emphasis. Oh, this trade is, I'm going to buy more shares in this stock, or I'm going to buy less shares in this because this is more of a speculative one. No, every single trade I get in, I'm looking all, you know, I'm 99.8% of the time is looking for stocks and, you know, being in tune with the markets. And those trades that you take are opportunities that you see as a result of paying a protracted long, you know, attention to the market. You might be sitting there for 15 minutes, you might find a trade. Or you might be sitting there for 2 hours, you can't find anything. You keep looking, or you're having trouble because the way the markets are behaving, you know, you can't. It's hard to, and that's what it's been like when it's been this volatile. You know, I prefer it when it's not so volatile. And basically, stocks tend to be more predictable. But you know, they still can be predictable. But sometimes it might be hard to find something which is looking very predictable. You know, because obviously the intention of every trade, you don't get in a trade because you don't mind losing. You don't think, oh well, I don't mind losing this one. No. You want to win every trade. You want to win every trade. You won't win every trade, but you do want to. And the more you look, the truth is the more you look, the more attuned you are, the more high-spirited you are, you know, and the more you're using your skill and perception and being objective about it, then you are likely to win, you know, most of them. Obviously, there's examples of people like Stephen Ducks. He won 53 out of 55 trades over a 2-month period in one period of his trading thing. And that's, that's down to the truth being that there's points in charts where it's such a high probability of working. It's 99% probability of actually panning out the way you think it's gonna. Just looking at that, 780 just before 1 p.m. It could have been an opportunity for a short. You don't know again. And look at the way it goes up towards 8, even before 12 p.m. Possible that you could have shorted at 8. You wouldn't necessarily wanted to have shorted it before 12 p.m. at $8 because look at the way the pattern's going. If you drew a diagonal line from the top of the peak at 10 a.m. to the peak at 10:40 a.m. and then the peak at 11:20 a.m. you see, and it's got the bottom peaks as well. If you drew a line down, it would go right through it. It'd look like a breakout at 780. That's what stocks do. They go trending like that and then they break out. But this, it went up to $8. $8 was such a strong level, and then it slowly went down after that. Again, it's being able to find the ones that you can predict and the ones that you don't think, you're not unsure of, you can just discard easily. It's got to be easy to discard trades. You've got to be able to look at a stock, think, oh, maybe that worked, maybe it don't. Have a little look into it. The more you're umming and ahhing about it, the more you're wasting time looking at that stock. In all truth, you're wasting time, because you're not looking at TVTY there, racking your brains for 10 minutes, and right round the corner, ZUWO is so obvious, and if you, at $9 to short it or something, and you could just, it'd be very clear. Oh, that's the problem. They say don't marry a stock, but you don't realise how much of an element of trading, agonising over stocks that you don't know whether you're going to get in. You need to be quick. You need to be able to see the opportunity, and bang! You need to be able to see SRG down there at 820. When you see it down at 820, and think, okay, right, look, it's just open there at 9:30 a.m. at 8:22. It's opened around there, and now look, it's gone up to 960. It's come right back down to 822. Maybe I could take a trade off 822. This is the kind of thing you could get. You could have picked that up off at 820 just on the basis of the strength of this pattern. Let's have a look at 822. I mean, it's difficult to do. It would be a little bit difficult because you'd probably be more thinking about, taking it off $8, but again, it's a REIT, look, it's a financial REIT there, real estate investment trust. It's got correlated stocks here that you can look at, give you a little bit more information about whether these are bullish or bearish, Then you read the news as well, what's happened April 7th, something's obviously happened on this date. Well, I don't know, nothing's happened there. There's no obvious news there. Is there an upgrade? No upgrade there. March the 10th, the last bit of, maybe it was, February 7th. I don't know, for some reason it gapped up above those levels. There's no obvious reason, there's no news event there. Purely price action again. This is just a result of the markets changing, Definitely, you could have taken that off, and do you know where you put your stop? I'll tell you. You could have taken it off 820, definitely. It would have been worth the risk, I think. It might not have worked, but I think that was a high enough chance of getting a bounce off there. So I'm going to draw some, and it's so obvious where to put a stop, it's so obvious. You put it at the next major level that it's giving you, that the chart is giving you. So in this case, it's telling us where to put the stop. It's saying put the stop below that spike there. So put the stop at 813, 814, 814, 813, just below that spike there. And basically, you're assuming you're going to give it a chance. You obviously don't, you think it's going to bounce off 820 anyway. You think it's going to bounce off 820. That's why you're getting in at 821, when the stock's at 820. But you're going to allow it to have one dip down to 8.14, no, 8.15 or 8.16, because that's a round number, 8.15, 8.16. If it goes below 8.15 or 8.16, that's it. Your idea's gone, you know. Not, oh, I'm going to wait for it to come down to $8. No way, you know. And this is quite a nice, this is a nice movement because obviously, you know, the way it opens, it gaps up, goes down a little bit, and then some big trading up to 960 again. You've got to look at, not always looking at the doom and gloom, but looking at the, you know, both sides of the story. And you can see here, look, you see where I'm putting this line now, that trajectory there is, you know, when I put it at the bottom of these at 820, it looks kind of symmetrical, doesn't it? It looks like the kind of median, like it's fiercely going down in a trend, but that's the kind of trajectory, and that trajectory matches up. Okay, so those four candles that are lining up with that diagonal line down, and then moving it down to 820, it's the same trajectory, you know, it just... Anyway, you know, taking it down, like, I'm going to use this as a pointer now, taking it down there, again at 820, well, I'm losing interest around here, you know, because this is now bounced up, it's gone up to 880, but it's losing steam, it's coming towards the middle of the day. You know, I wouldn't want to take it for 820 again. I want that first 820 because that was the idea. So, you know, it would have, I wouldn't really have looked at that 820 in the middle there. Anyway, I'm just going to finish this video now, but I hope you've got something out of that, because I think that's going to give you an insight into how to look at chart movement and looking at levels, you know. When the markets have opened, well, it's pre-market now, so there we go. It's a good time to end because this is the time I'm getting onto my own trading now, so I'm going to make myself some lunch, look pre-market, and then take some trades. I'll see you later.